jumping right into the deep end this Wednesday. Udayan, we're talking about IT. Given all the flurry of results, TCS is first on the radar, and we've got Mr. Ramanathan from Chennai who has a query. Let's listen in.
Good evening. This is Ramanathan from Chennai. Mr. Udayan, I have high regards for your opinion on the program. My question is, I have accumulated shares of TCS at 3,624 per share. Value for almost 6.5 lakhs of rupees. Right now, I find it is at minus 16% of my acquisition price. Please advise whether to hold or book loss, or else probably buy some more, hoping to average out. Thank you.
Well, it rather depends on your holding horizon, sir, because TCS is a very, very good company, as you know, being an investor. But right now, there are some headwinds. The global picture is very, very uncertain, both in the US and in the Eurozone, where a large part of TCS's business comes from. And therefore, one is not very clear what the kind of volume picture, business volume picture we are going to see over the next 4 to 5 quarters. That's problem number one. And B, because of the attrition issues with hiring, they've seen considerable pressure on their EBIT margin. So both from a volume point of view and from an EBIT margin or profitability point of view, there are some headwinds or problem areas for TCS. And that is the reason why the stock has corrected from 4,000 to 3,000. I mean, it's a 25% correction in 6 months, which is very unusual for a company like TCS, and which is why your holding price, I mean, you've seen a 16% erosion from the purchase price yourself. I would say that if you've held out for so long, and if you can stomach some more weakness over the next 3 to 4 months or 3 to 6 months, I don't think it makes sense to book a loss in a company like TCS if you're a longer term investor. Does that mean that the bottom is 3,000? I don't know. Maybe the stock can rebound and even go down further if there are a couple of bad quarters going forward, which is fully possible for IT. So I think you should be patient and you will do well not to look at the stock price on a daily basis. But if you can take a little bit more of a loss, I think it's possible that TCS goes down to 2,800 kind of levels even, which would be a very steep fall from your purchase price. But over a period of time, I think you will recoup your losses and do good as well. So I know it's painful to hold on to a losing company, but over a 2-year period, I think you will still be in the green, and then onwards, you probably will make money in this company.
Okay, the other newsmaker of late, of course, has been Zomato with the recent acquisition. So markets clearly showed their dismay at the Blinkit acquisition, and Zomato has been trying to, of course, reassure investors. But let's hear out this particular query.
Hello, my name is Vinod. I am holding Zomato shares of 2,500 quantity at the price of 83. My query is that should I average it at the current levels or should I sell it for a loss? Please suggest.
I'll be careful with Zomato. I actually think it's a very good franchise in its core business, but I suspect that they are making capital allocation errors right now. I'm not a great fan of their foray into quick commerce through Blinkit. I don't know whether they had to do it because of the history of relationship with the company, but in my book, it probably will, on hindsight, will look like a capital allocation error from the Zomato management. Quick commerce is a space where much bigger fish are present. You've got players like Jio, Tata's, Amazon, Flipkart, all in that game, and I do not think Zomato will make great headway. The more I look at this management, I think they are beginning to panic a little bit. So I don't know whether you should be averaging at this kind of price at 54, 55. And it's a tough one to say that you should be cutting out sitting on such hefty losses in percentage terms. But I really don't see any major bounce in that stock from this current level and it going back to 90, 100 kind of levels anytime soon. I would be very surprised if that were to happen. I think there are valuation issues, there are capital allocation issues from the management, and I think even in the beleaguered digital space, you probably have better options to look at than Zomato. So this is not an active recommendation to sell the company, not at all. But I think you should be careful about averaging from here on and just wait and see how the next few quarters pan out.
Okay, Gaurav Gupta has also written in. He has a query on Astral Poly. Let's listen in.
Hi, this is Gaurav Gupta from New Delhi. I had bought around 500 shares of Astral at an average price of 1910 between April and May, and it has been going down ever since. Sold 200 shares at 1640, booking a considerable loss. What should I do about the balance 300 shares? I can hold them for a medium term, 6 months to 1 year. Thank you.
Well, the stock has had a recent bounce. I think from the lows it's up about 10-12% already, and from the price at which you booked the loss, it has actually gone up quite a bit. And I think there might be a lesson there in that price movement, that you probably sold too early. Yes, there was a loss, notional loss, but I don't know whether it was a prudent thing to have booked that loss, because in my book, Astral is a good management. It's a fairly dynamic management, and while it may only be the fourth largest PVC pipes player, I think it's actually a much better player than some of its larger peers like Supreme Industries or Finolex. Actually, Astral Poly is a much better stock to own compared to Supreme or Prince or Finolex in my book, because they seem like a management which is trying to put together a more holistic household products business. So I think they're getting into things like sealants, adhesives, even maybe paints at a later stage. I like this kind of management thinking. They're also a high growth company. I think even in the next 3 years, they probably will grow at 20-25%. And therefore, they have a superior growth profile compared to their peers. Valuations too have moderated because it was a very expensive company, but it's still not a cheap company, but trading at very high PE multiples. But they have moderated somewhat. But I think the growth takes care of some of that. So I would not panic with Astral Poly at this point in time, particularly if Indian companies were to embark on a capex program, as looks increasingly likely over the next couple of years. Then I think companies like Astral will stand to do well. There is only one question which I'm unclear about, which is whether it's better to own Astral or it's better to own something like a Polycab, which is trying to put together a similar kind of a business profile. So these two managements, I think, are comparable. These two stocks are comparable. So in your shoes, I would consider owning a bit of both these companies and see how things go from here. I mean, if that helps you.
All right, and let's also listen to Nirupam Kakati, who has a query on L&T Infotech.
Hi Udayan, this is Nirupam Kakati. I have 23 shares of L&T Infotech at the rate of rupees 6046 per share. Should I buy, sell or hold?
You're sitting on substantial losses, and I sympathize with you because L&T Infotech shareholders have not had very good going over the last few months, especially after the Mindtree merger. The stock has nearly halved, I think, over the last year. And that is very unusual for L&T Infotech because it has been a wealth creator over the years, but somehow seems to have lost its way along with the sector over the last few months. I think one of the concerns is, of course, how this merger with Mindtree is settling down at a difficult time for the sector with many headwinds, and that's something which is worrying many shareholders. And I think the other issues probably are that L&T Infotech has a very large exposure to the BFSI segment, the financial segment, where there are lots of headwinds. I mean, you've seen the recent US numbers from large capital market players, even like JP Morgan and Morgan Stanley, and those don't bode very well because the capital market segment is a large segment for L&T Infotech as well. So there could be some volume issues going forward, though I still expect the company to grow at 15% plus over the next couple of years. And they do have some kind of a client concentration risk because the top 5 clients, top 10 clients account for a very large share of their overall business. So these risks are there, but the valuation issues have got addressed because of the halving of the stock, as I mentioned, and L&T Infotech is no longer the super expensive stock it used to be. And now I think valuations are more or less in line with something like a sector leader like TCS. So I think the time to sell L&T Infotech is gone. I mean, at this price, if you sell, you might regret it later. So I guess you just have to bite your tongue and probably grit your teeth and hold on to that stock for the next few quarters, because it is a pedigreed management, and sooner or later I think the stock and the company will generate the kind of rewards that you've been expecting.
All right, that's all we could pack into this edition of Ask Udayan. But do keep those queries coming, and we'll take a select few every week. Udayan, thanks so much for taking those queries today, and I look forward to seeing you again next week.
If you like the video, do like, comment, share and subscribe.